105 billion euros. That's not a typo. That's the number that just broke Europe. A plan that was supposed to punish Russia. A plan that was supposed to save Ukraine. A plan that every leader in Brussels called brilliant. Just imploded. And here's what no one's telling you. The explosion didn't come from Moscow. It came from inside the alliance. Right now, as you're watching this, bankers are panicking. Lawyers are scrambling. Diplomats are making phone calls they never thought they'd have to make. Because something broke. Something fundamental. The European Central Bank said no. The United States said pull back. And suddenly, frozen Russian assets, hundreds of billions sitting in European vaults, became the most dangerous money on earth. This isn't about politics. This is about fear, raw, financial, existential fear. Because here's the question keeping Europe's leaders awake at night. If we touch this money, what happens next? What if investors around the world start asking, if they can take Russia's money, can they take mine? What if the answer is yes? What if the entire foundation of trust that makes European finance work just cracked? Stay until the end. Because the final section of this video reveals something the major networks won't touch. The long-term consequences that will reshape global power for decades. Let's break this down. February 2022. The world watched in horror as war returned to Europe. Within days, Western governments unleashed the financial equivalent of a nuclear strike. They froze Russia's money, not just oligarch yachts, not just corporate accounts. The Central Bank of Russia, the nation's emergency fund, its financial lifeline, hundreds of billions, locked, untouchable, gone. It was the largest asset freeze in human history, and for a while, it felt like justice. But here's what nobody expected: that frozen money started whispering, sitting there, doing nothing. While Ukraine burned, European leaders looked at those billions and thought, why not use it? The idea was seductive, simple, almost poetic. Take Russian money, give it to Ukraine, let the aggressor fund the resistance. The European Commission got bold. They proposed a massive loan, around 105 billion euros, backed by those frozen reserves. Ukraine gets the cash. Europe doesn't burden taxpayers. Russia pays for its own defeat. Perfect, right? Wrong. Dead wrong. The first warning came from the place no one expected, the European Central Bank. The ECB doesn't do politics. They manage money. They protect stability. They stay out of the fight. But when Brussels came calling, asking them to guarantee this massive loan, the ECB did something shocking. They said no. Not quietly. Not diplomatically. No. Their argument was devastating. This isn't our job. We exist to protect the euro, not to become an insurance company for geopolitical decisions. If this goes wrong, we're not holding the bag. And just like that, the cracks began spreading. Because here's what the ECB understood that politicians didn't want to admit. This wasn't just about Russia. This was about precedent. Let me ask you something. If you're a country, say Saudi Arabia, or China, or Brazil, and you've got hundreds of billions stored in European banks, and you just watched Europe decide that, actually under the right circumstances, they can take someone's money, what do? You start moving your wealth, quietly, quickly. Maybe to Singapore, maybe to Dubai, maybe somewhere that won't suddenly decide your assets are problematic. This is the nightmare scenario. Not one country pulling out, not even 10. But the perception that European banks aren't safe anymore, because in finance, perception is reality. Once people believe a system can turn on them, the money disappears. And it doesn't come back. That's what the ECB saw coming. That's what legal advisors across Europe warned. And that's exactly when things got worse. Everyone expected Russia to fight back. Moscow threatened proportional retaliation, seizures of Western assets, nationalization, restrictions on raw materials Europe desperately needs. That was predictable. That was priced in. What wasn't priced in? America getting cold feet. Washington looked at this plan and did the math. If this loan goes forward and Russia sues, and courts rule it was illegal, who's on the hook? The answer, everyone who backed it, including the United States. So the US sent a message to Brussels. Quietly, firmly, unmistakably pull back. Now, not because they don't support Ukraine. Not because they've gone soft on Russia. but because America's lawyers saw the iceberg, and they didn't want to be on the ship when it hit. Imagine that, the world's largest military alliance, the most powerful economic bloc on Earth, built on unity, trust, and shared purpose. And suddenly, Washington and Brussels aren't on the same page. The pressure was coming from both directions now. Moscow threatening retaliation, Washington demanding retreat, and Europe trapped in the middle. Moscow wasn't just watching. They were calculating. Senior Russian officials declared that seizing frozen assets would be treated as casus belli, an act of war, not a metaphor, not rhetoric, war. Inside the Russian parliament, lawmakers prepared counter strikes target Belgium first. That's where Euroclear sits, the financial clearinghouse holding most of the frozen funds. Sue individual companies, sue individual countries, drag Europe into international courts for decades, seize Western assets inside Russia, factories, equipment, bank accounts, nationalize everything Western companies built there, cut access to raw materials, metals, energy, shipping routes that Europe still quietly depends on. The message was clear: you want to play with frozen assets? Fine. But when we freeze yours back, don't act surprised. And here's the terrifying part: they weren't bluffing. European companies still have billions tied up in Russia, pension funds, energy contracts, real stakes. If Moscow starts seizing, the damage ripples everywhere: stock markets, retirement accounts, entire industries. Suddenly, this wasn't a clever financial maneuver anymore. It was a minefield. Let's zoom out. Why does any of this matter to you? Because trust is the invisible foundation of everything. When you put money in a bank, you trust it'll be there tomorrow. When a country stores reserves overseas, they trust those assets are untouchable. When investors pour billions into European markets, they trust the rules won't change based on who's in power or which war is happening. Break that trust, even once, it takes generations to rebuild. Europe spent decades, centuries, building its reputation as a stable, rules-based financial system. And now, in one crisis, that reputation is wobbling, not because of what Europe did, but because of what Europe almost did. The mere discussion, the mere possibility that frozen assets could be seized is already changing calculations. Countries are quietly diversifying. Investors are asking harder questions. The next time there's a crisis, any crisis, there will be a shadow over every European financial decision. Remember what they tried with Russia? That shadow doesn't go away. Let's talk about the human cost. Ukraine is fighting for survival every day. They need weapons. They need fuel. They need salaries for soldiers and teachers and doctors. This loan was supposed to be a lifeline. Without it, the math gets brutal. Budget gaps widen. Military supplies become uncertain. Infrastructure crumbles faster than it can be repaired. Winter hits harder when the money runs out. Leaders in Kiev understand something that press releases don't capture. Every delay in Brussels translates directly into losses on the battlefield. Every hesitation becomes measured in lives. That's the weight of this collapse. It's not just about legal frameworks and banking regulations. It's about a country bleeding while its allies argue about paperwork. Here's what this moment really reveals: war has changed. It's not just tanks and missiles anymore. It's banks, sanctions, frozen accounts, SWIFT codes, and reserve currencies. The modern battlefield extends into every financial institution on Earth. And the weapons, they cut both ways. Freeze someone's assets today, and you're sending a message. But you're also asking a dangerous question. What happens when they freeze ours back? What happens when other countries stop trusting the system we built? What happens when money, the one thing everyone agreed was neutral, becomes a weapon of war? We're finding out right now. So where does this go? Option 1: Europe backs down completely. The frozen assets stay frozen permanently. Russia claims a symbolic victory. Ukraine looks for funding elsewhere. Option 2: Europe finds a new legal structure. Maybe something slower, more defensible, less aggressive. Years of court battles follow. Option 3: the pressure builds again. Another crisis, another escalation. And next time, maybe the restraints don't hold. No one knows which path we're on. But here's what we do know: this moment, this collapse, will be studied for decades. Because it showed the world exactly where the limits are, and it showed Russia, China, and every other major power exactly what they can push against. 105 billion euros, that was the number, but the real cost, incalculable. Trust, credibility, unity, strategy, all damaged, all in play. The frozen assets still sit there, silent, untouchable, dangerous. And every leader in Europe now knows the truth in modern warfare. Money isn't neutral. It doesn't sit safely in vaults. Money is a minefield, and every step forward carries the risk of explosion. If this breakdown opened your eyes, do us a favor, hit like, subscribe, turn on notifications. We don't do clickbait, we do clarity. Every week, we break down the stories shaping our world, the ones that matter, the ones others won't touch. Your support keeps this channel going. Thank you for watching. Stay sharp. Stay informed. We'll see you in the next one.